Fundamental guest for the day, Sonam Udasi from Tata Mutual Funds is joining us now. Sonam, hi, good afternoon. Was going through the notes, a couple of pointers that you had mentioned. You're saying that most of the concerns have been priced in by the markets, but the bigger question is, do you think they've peaked out, or are they further more, likely to pan out going forward as well?
I think, see, the way the globe is, I don't think risks are something that you can ever sort of caution out. That said, India is relatively better off from where it was, say, in January. Whatever interest rates, US interest rates have to do, we are at the fag end of that. You were worried about inflation and oil, that's now getting behind us. We were more worried about domestic elections. We are somewhere reaching close to that event as well. I think that's getting priced in my view. And I think going forward in the next 1.5 years, I think we should be better positioned. We have taken bitter pills of demon and GST, and the GST numbers are slowly coming back. As it normalizes, once the new government comes in May, June, they will have higher numbers to talk about. I think that should keep the risk appetite up. In the way oil has reacted, I don't think the central banker would want to raise interest rates in a hurry. If that is true, then risky assets like equities should do well over the next 1.5–2 years.
Have said that many risks have been priced in, but what would you say? I know, like you said, you can't possibly calculate all the risks, but what about the volatility up to the general elections? What about if Jerome Powell once again changes his mind about the interest rate hike cycle? And also, what about the fact that we do have the constant trade conundrum between US and China, which may take a turn for the worse anytime?
So let's take it one by one. In terms of elections, I think India has faced it every time we go into election fever. I think once the state elections are out, you will get a sort of better handle of where the outcomes could be. But that said, Indian markets and Indian returns on equities have, never really benchmarked themselves to a political sort of environment. I think it's largely led by what is macroeconomic indicators, and these are looking very, very good for India. You have had low base sort of growth for a few 2–3 years. Earnings were not that great. I think that base effect will sort of catch up next year, and earnings and macro will start looking much, much better. So I think in that logic also, equities as an asset class should do well. I think even if Mr. Powell was to decide on interest rates tomorrow, I think 5 or 6 rate hikes have already happened. Maybe 1 or 2 more might come, and they might come sooner than expected. I would think that 80–90% of that concern is behind us, and even if you change your mind, that is a little bit more that you'll have to build in. What happens between US-China? I think the way I look at it is that if you're trying to deglobalize the economy, and India is not a very, very big exporter of anything, we export a lot of services. I think on balance, deglobalization is not such a bad thing for not so put together economy like India. We are not very, very big exporters of many things. We'll get hit, but relatively it should be better off.
Point taken, and clearly, the elections, the Lok Sabha elections, that is, are going to be an important trigger. Would you advise that one must stay away from sectors which are more regulated by the government, or which are in some way or the other related to it, and it's a better deal to be investing, or rather at least considering secular names, secular sectors and stocks?
I think India is a secular story. I've always felt that it is better to be domestically inclined. So one measure that we look at is where is the per capita income of average Indians moving. I think we are a $2,000 economy currently in terms of per capita income. in the next 5 years, whoever comes in will look at an economy in 5 years which is $3,000 per capita income plus, and that means affordability of certain key things will go up for Indians. What are the segments that we can play with? Where is the earnings momentum coming from? So a lot of canvas is there for you to sort of look at and invest in. So I think from that standpoint, yes, we look at more domestic and therefore more secular. So autos looks interesting, banking looks good, consumer names are evergreen in that sense. But in all likelihood, I think what in my view, last 1.5 years, if you see, the smaller the index, it has done well. So Sensex has trumped the Nifty, Nifty has trumped the BSE 200 and so on. I think that is going to reverse as we speak over the next 6-9 months, 1 year. And the market should become more broad-based in what it does. And when that normalizes, a lot of the sectors which seem out of whack, which seem in deep value, will sort of come back to normalcy. I think that's where investors should take advantage of.
Okay, you mentioned domestic facing sectors and hence names like consumption and autos. However, does it mean essentially that you believe that this declining trend we've seen in monthly sales in autos, be it passenger vehicles, MNHCV, two-wheeler still is a little resilient, but for PVs, for MNHCV, you think that trend is going to halt?
These are trends in the short term, every quarter, every 6 months, depending on sentiment, cash flow, etc. And maybe the view on, politics, etc. People take a call, customers take a call whether they want to go in now or. The question, therefore, I always ask is, will India stop consuming cars? Is penetration enough? If you want bigger infrastructure, will truck consumption or MHCV consumption stop, or will it start to degrow in a big way structurally? If the answer is no, then if you have a 2-year view, these are the sectors to look at these prices. If structurally the view is that no, the world is in a declining stage and India will follow suit on these things, then you can argue on that. But otherwise, I think penetration levels are still far lower in India when compared to even some of the developed emerging markets.
Okay, Sonam, we'll leave it at that. Thanks much for taking time out to chat with us about